Welcome back to the Sunday Report. It's Josh here. You know what it is. Let's hop right into it. So real quick, before we get into our weekly recap, I do want to say that we have finalized a partnership with a fund out here in St. Louis called First Capital. And so soon we'll be having some more hedge fund data in the Discord that should be starting in this upcoming week or the next. And we'll be getting more technical analysis and more inputs from different portfolio managers and analysts that work over at that fund who want to start using this Discord as well. So I'm super pumped about that. It's a ton of more content for our subscribers. And remember, if you're a subscriber, that price is only going to go up from here on out. We did get an influx of activity in the Discord. It's super awesome. And I'm really excited about all the content that we're going to be able to bring to people who are just retail traders or working from home, maybe just on their phone. There's going to be lots of awesome data coming your way, and I'm super excited about it. So last week we were talking about daring to be bullish, and we did kind of see the market give a little bounce. If we look over here, down here in the corner at the S&P, we saw that we did manage to almost touch 410, come up to the 409. Kind of chopped up on Monday and then chopped up a little bit more and then massive capitulation. If you're following on Twitter, I was kind of drawing illusion to how much this looked like this May graph right here. And it looks like it played out just the same, where we had these massive drop-offs and then another drop-off here into Friday, which we barely bounced out what is considered a technical bear market, and just barely clearing that 390 into the close that day. But the fact that this market did not bounce more, and I thought there was a potential even to go all the way to 420 on some of the, the little itty bitty catalysts of China reopening. That did not play out whatsoever. And I think some of that psychology that we talked about last week is what is plaguing this market. And one of the other things, if we go over here to this chart, you can see how overbought we were coming into the Friday close. If you look at the RSI here, look how ridiculously over the 70 mark this is coming in that rally. Although some volume coming in. Now, this is fairly flat, so don't let that fool you right there. But if we go to this weekly chart, which should be this one right here, you can see how persistently low we are on the weekly chart. Now, when does this usually happen? When we're about to crash. It's the only time where you see a weekly chart consistently stay at this super low RSI and still get no real bounces up. And you can see how bloody this looks. This looks like it just wants to completely capitulate. And so when I'm thinking about this market environment, I'm thinking about the psychology that's probably hitting most investors, and I'm looking at these graphs and the damage we're getting. This looks really, really bearish to me. As far as trading went for last week, we had some great opportunities on Square that gave some good profits. And actually here, I could pull this up for us. If we go here to the winner circle, there were some great UVXY plays we were able to pull off. SPY was printing money. We did have some pretty incredible trades. We had this 7-minute trade on Square that gave 104%. Because there's lots of chop in the premiums there. It was really easy to snipe those. And there's a lot of plays that we already have set up coming in next week. Did take the opportunity to go ahead and load up some more uranium. I don't know what that was. I still like the potentials that we're seeing with TLT here. It's starting to come back up. These trades are starting to play out. That's fantastic. Made some really good money shorting Apple. Let me pull that up over here so you can actually see that. And so that was playing out really well. I think we entered probably on Wednesdays when we were kind of loading up on that. And then just as soon as we opened that trade, nothing but profits. As far as the Apple news goes, there was news that hit, I think, on Thursday or Friday as well, that was saying that they want to relocate some of their production to India or other locations. To me, this is really bearish in the short term. It shows how bad it is in China for this company that they're starting to panic and want to look for other areas where they can relocate their production. And as far as news goes for last week as well, I do want to say, we'll probably cover this in the briefing a little bit more as well, that They are trying to do price controls on gas prices now. That means that, some people might see this as a good thing. Really, really bad thing. We have seen price controls happen previously in the 70s. And if you're confused on what I mean by price controls, there's a bill that got passed in the House that would literally limit how much gas prices could achieve. Okay, so you might think that this is a good thing. It's an absolutely horrible thing, because what happens there is, if you cap how much profit a company can make, you cap how much the price can go, but the costs of their operations continue to rise because inflation is still occurring, because there's still supply chain issues. What occurs is that these companies just straight up shut down shop, because it just makes it impossible for them to operate. They can't raise their prices to make up for the supply chain issues and the rising costs. But the issue here is that politicians don't care. Politicians just want prices to come back down so that they can get reelected, so that they'll still have a job, because if they don't, then someone else will have their job. And so that is their number one concern, is to maintain power. That's all they're incentivized to do, is maintain power, not actually come up with solutions, but to create the portrayal of, look, I'm fixing this for you, even though you aren't thinking about the causes that'll happen because of this, or the negative effects of it. Look, the prices are coming down, and most people are just going about their days. They're not thinking about this, even though it's so essential to have that foresight to see, whoa, this is terrible. You're just going to cause more issues. But it just also paints a picture of how inflation is the number one concern right now. So when we're looking at this market and talking about how bearish I feel, it's because when I see all this panic occurring, whether it's at companies or whether it's in the government, all of this is related to the inflation issues, the supply chain issues. There was even a Fed report that came out that said, okay, at least 3% of this inflation overall is still from the stimulus that we printed, and the rest is correlated to these other issues. The accuracy of that report I can't really speak to, but it just goes to show, we are getting the compounding effects of a lot of issues that have been caused by the war and the pandemic and the money printing, and they're all now piling up on top of us at once in an environment where inflation's the number one issue. And jobs, if you've been watching these JOLT reports, and I don't think I've covered this enough, so we're going to cover it right now, but these job reports show that there's tons of jobs, more jobs than there are people to get the jobs, okay? Employment is really high. All right, I rather should say unemployment is really low, and there's lots and lots of openings. So what would cause the Fed to stop beating this market over the head with a sledgehammer would be to say, oh, okay, we're starting to cause job destruction. However, the Fed does not have to worry about how hard they hit this market right now, if those JOLT reports still continue to say that there's tons of jobs available. So even if you cause some job destruction, there should be other jobs that people can go and hop into. And until we see that narrative or that situation change, this is really worrisome for this market. No one's going to come and save you until that is not the case. All right, so let's go over the economic data that we have for this week. Already, not too much. Monday, Tuesday, we do have a Fed Powell speech on Tuesday. Bostic talks on Monday. Both of these are going to be bearish. New home sales probably continue to see this start to come down a little bit. It's been mostly reaching a flat top right now. So we should start to see that downturn on those markets. But Wednesday is going to be the big day here, and that's because of our FOMC minutes. And, as you just heard me say, I think the Fed's going to come right back with the hammer, probably another 50 base points, slam down onto this market. Some more downturn already. We're seeing investors scared to get back in this market, scared to take these rallies, scared to step a foot in this market. I am feeling so bearish. There's so many indicators and data that just scream crash potential. I'm looking at 350 next for this market, and as the weeks go on, revisiting those COVID highs in that 330 range seems more and more likely to me, especially just the fact that bullish rally could not get any real legs is a symptom to me of showing how rough this market truly is. Bounce potential seems really difficult to achieve. Is it impossible? Well, nothing's impossible, but holy cow, does it seem difficult to achieve. So we're looking at GDP growth. Do expect this to be to the downside. This is still first quarter data. Second quarter, I think, is what could really cause some panic. Then we have personal spending, personal income. I expect personal income to be pretty good on the numbers. Just remember that even though people are making more, inflation so high that they don't actually feel it. Okay, so prices is everything that's going up. People are not feeling richer right now, especially when they look at these gas prices. These things are going to continue to suppress spending habits. And I guess it's worth saying right now, which we'll probably also say next week, but the market will be closed on Monday. So that's what's on my mind for the economic data. Not really a lot to cover. This consumer sentiment will be important as well. It's just overall, I expect all this to be bearish. Nothing really that I expect to surprise or change that trajectory. And I'll just go ahead and show this for company earnings. It's going to be occurring this week. These are pretty nice, but Zynga makes these. And I haven't been playing earnings. For the most part, all the big earnings that I was looking for, I've passed. I guess the one thing I'll say looking at this is that Best Buy stands out to me. Petco stands out to me. Abercrombie and Fitch. I expect a lot of this retail to continue to be weak. So Dick's could probably be really weak. NVIDIA will be an interesting one to keep an eye out for as well. Dollar General, Dollar Tree there. That's more retail. That'll probably do poorly. But NVIDIA could hurt the wider market. Remember what we've seen from all these semiconductor companies is rally into earnings and then sell off afterwards. So just something to keep in mind. You could pause this and look at whatever ones are interesting to you. Of course, if you're in the Discord, this chart is also in there. So what to talk about for the briefing? I mean, I feel like we actually covered a lot of things before the briefing, talking about last week and different news that's hit this market. The one thing that I do keep getting asked about is what's going on with Elon and Twitter. Twitter is looking like a gold mine for Elon if the company's actually worth buying. And when I say that, I'm speaking to some of the comments that he made at the recent summit, which was held by the All In podcast, which is for CEOs and angel investors. I think actually one of them was a fund manager. But nonetheless, the big thing here is that if Twitter is substantially more bots than they claim, which they claim 5%, but Elon says at a minimum it's probably something more like 20%, but could be as high as 40%. Excuse me. If that is true, it means that there's going to be big lawsuits headed this company's way. They're going to need a massive repricing on what the company's worth. We also did have a video go viral featuring the CEO where he made some very I almost said unappealing, but that's not the word. Some very basically going on his own defamation campaign to ruin his own reputation, where he said, Elon was special because he has Asperger's, and so some special ed kid is going to try and take over this company, and that people can't make rational decisions themselves unless you hand select the things that they can see. These are very crazy totalitarian ideas. This is the way a crazy dictator thinks. And so to hear him say such irrational things is, it's sad, honestly. At the end of the day, you could be mad about it, but in many ways, it's just sad. It's like he said such a cultish bubble. These companies have such toxic work environments where these people genuinely think that this is the right way to handle society. That they're just so much better than you, that you can't possibly make a decision on your own. We've talked about this before. I don't want to get stuck in a hole about it. But for Elon, it's great because now Elon's got all this data, all these things he can come out with them with. He tried to get them to give the information for how bots are calculated on the site, and they said, oh, it's super complex. It's like you're talking to the guy that made the largest electric vehicle company and is sending rockets to Mars. It's not going to be too complex for him and his engineering team. And if it is, the guy's got more money than you, he's just going to find someone that can't explain it. Which, it's just laughable that it would be too complex. It's also important to remember that Tesla has the largest AI team in the world as well. So taking some of that engineering team and saying, hey, do this as a pet project, basically. Twitter is not that complex. So for them to, have this elitism about it is just, it's absurd. It's laughable. They're jokes, basically, at this point. And I think that's exactly how a legal team will treat them and how the SEC will treat them as well, especially as more of this is going to be revealed. You know, when Elon takes leadership of this company, he's going to have access to everything, including how those algorithms actually work. And based on how they've been acting, I'm going to say that it's probably pretty likely that some of those algorithms are not set up in a way that constituents of the government would like to hear about, or that the general population is going to want to hear about. So when he starts blowing the whistle on some of these things, I think this company could be in a lot of trouble and might not be even something that Elon wants to buy. He might just go the route of creating his own social media. And after Twitter gets bludgeoned by all these future headlines, we'll see if that ends up being the possibility he goes for. And now if he makes that purchase, he's going to get this company for super cheap. And I will say this is no longer anything that I would want to own until we get more confirmation on that. I would say that there could be some good risk reward if we hit a bottom there to say, no, I think I'll still buy it. But just keep in mind all the risk you're taking for that, because this company could be headed downwards and never bounce back. So I do also need to say sorry for not getting a crypto video out sooner. I've been really busy. We've been building those partnerships. I've been talking to people one-on-one about a lot of things. The Discord's been more active, and there's just a lot going on. I do hope to get that content out, hopefully sometime this week, most likely on Wednesday. So because I got time blocked off for it. So what I'm thinking right now, though, and one topic I want to discuss, I feel like no one's talking about, is MicroStrategy and the CEO, Michael Saylor. Now, this company took out large loans to invest in Bitcoin. He's probably one of the biggest Bitcoin advocates and probably one of the largest holders, both within this company and him personally. Now, his company has nothing to do with crypto whatsoever. In fact, the underlying business for this company is on a downward trend and has previously in the past gone bankrupt. And one of the things we're seeing is they're struggling to make payments on these loans. Now, he's come out on Twitter and said that they're fine and said that they can make these payments and says that everything will be okay. Now, I've heard from different analysts and from different resources personally that this is likely not the case, and that there are some really bad warning signs on how leveraged they are and their debt for an asset that is depreciating. It looks like they have in between a 28,000 to 30,000 entry into Bitcoin. Bitcoin is bouncing in these levels, and they're likely having to continue to sell it to cover these loans. If the creditors come after this company, they can just take the Bitcoin and they will for sure just sell it to grab cash. And it's a very large portion of the market that this company owns because they are so far out leveraged on it. And their underlying business, which is doing poorly, can't help them cover those expenses. And no one else is giving them loans. So that's the first warning sign, is that they try to get more loans and they can't. So it sounds like that they're starting to run out of fuel to continue this buying pattern that they've had and been undertaking. Sounds like they were buying near the highs and kind of overloading themselves on risk and not really paying attention to the market environment. And he's hoping that regulation comes in and it probably won't affect Bitcoin. He could be very easily right about that. But when we're looking at what could cause a big crash that would bring us to those technical levels that we're seeing with Elliott waves, which I was registering a few months ago at near 16,000. And one of the things that I was talking about with our fund partners over at First Capital is they were also seeing, there seems to be some indication that we could go all the way to 16K for Bitcoin. And so when you're kind of looking at the environment and you're thinking regulation probably shouldn't hit Bitcoin, but the market still looks like it could be pretty rough, that is a huge red flag that I'm seeing, and this probably won't be something I only mention in the crypto videos. So I wanted to mention it here. I think there could be a lot of warning signs here, and I know the CEO has continued to say things are fine, we're fine, but also let's remember how incentives play out. Is he incentivized to tell you what underlying issues could be at the company? Would he? Not at all. Because if he said anything negative, the price would tank, and that would be horrible for them because they'd have to sell their underlying asset, which is supposed to cover their loans. And if the price crashes, creditors might just come after them anyways and just say, well, if the value of the house for your mortgage goes under half what the mortgage payment is, taking the house isn't going to pay the loan. Suddenly the banks might be really worried if you can't pay and the asset underlying is depreciating. I don't know what the structure of this debt is, but there are signs that they're 20x leveraged into this asset, which is already in a very troubling looking market. Now, what could save them from this? Basically a miracle that bonds actually start acting like treasuries. We've seen treasuries bounce back, start to do really well. We did have that period in time where it looked like Bitcoin is going to need to be stable, despite the fact that we're entering in a weak point in the cycle for the asset class. Although, again, this is such a young asset class that these cycles are not like an exact science. So I thought, okay, this could be interesting. This could be a change in sentiment. Then we got that huge issues with the stable coins. I don't think we're done with issues with some of these stable coins. And remember, the stable coins carry all these other coins on their books. So they had to sell off large portions of Bitcoin and some of the other smaller coins as well to cover these expenses. And so this is all going to need some time to play out. And I do want to say that there is a substantial amount of risk in this market. And it could turn into something like a dot-com bubble. If the market also has some capitulation, think about all the issues going on. If gas prices are going up, people start covering their spending, which we've already seen in these retail stocks. It does bring some warning signs of are they going to have extra cash to hold these crypto coins, or is a lot of the general population that's wanting to buy Dogecoin and such going to have to sell these to buy things that they actually need, like food, clothes, gas, or simple things. This is the issue that we talked about with gold as well. You can't eat gold. If you need food, you're using gold to buy the food. You're not using, you're not sacrificing in such a way that you're just gonna hoard gold. You use the gold, you spend it, you don't hoard it. So you buy it before things get bad, but while things are bad, you're not hoarding that gold. You're using it to buy the things that you need to survive. So this will be interesting to see how this plays out, but it does have me feeling unusually bearish when it comes to this. And when I'm looking for a catalyst where we're seeing a lot of warning signs, Michael Saylor seems to be on the forefront of that. And I know he gives a very strong argument. He is very well spoken. He is very well researched on a lot of things he's talking about. He's been challenged by a lot of people in lots of different debates. And I think he's right when it comes to the long-term trajectory of Bitcoin. The issue that I have is all the leverage that he took out to buy that asset class. This tends to go really, really poorly. Overall, in these short time horizons where you're seeing this market getting crushed and monetary tightening, and suddenly you might have liquidity issues. And so if he continues to have to sell this and we get all these building pressures, it could lead to a big capitulation event where the creditors come in to take all that Bitcoin and they try to sell it as fast as they can to grab as much cash as they can so that they can recoup those losses from those loans. And remember, the underlying business model has gone bankrupt before, so it does put in question of okay, is this excellent engineer actually good at running companies? So just something to think about. Go ahead, leave your comments down below. Tell me what you think of the situation. Maybe I'm off base, but it is something that I can't not at least report on, because I think it's good to stay informed and also good to have that contrarian opinion out there, because I think lots of people are on Saylor's side and I find him very trustworthy. But I do find this a little bit concerning, and I think it needs to be said. That conversation needs to be had. And that's going to be it for the Sunday report. And I know seems really negative, and embarrassed markets and investors might be really negative. But in the Discord, we're not. We're keeping a positive mentality. You can be positive about being bearish, especially if you're buying things like UVXY calls or you're shorting the markets. You know what to look for. You know what energy you want to look for. All of this, it's content in the Discord. And it's easy for us to stay positive because because things like this are really easy to profit off of when you're just not a stock buyer and you're using the utility of options to make money on downward movements or buying products like UVXY. The crypto market crashes, you can trade MicroStrategy, Mara, Riot. There's lots of opportunities in this market. So just because things are bearish and they seem awful doesn't mean there's a lack of opportunities for us. Just look at that TLT trade that's starting to play out in our favor. Even though we didn't really have the best entry. We had a little bit of turbulence on the entry, but now it's starting to really play out. These are all going to be huge opportunities that could turn into big money wins. And so it's, stay positive out there, okay? You can really turn a trade around real quick or turn your trajectory around for the year. We're not even halfway through the year yet. So if you're feeling like it's rough, just realize that there's a lot of people who also have done rough, but you've got more than 6 more months to bring this back, turn this ship around, and really reset your mindset. Because I know lots of people are feeling burnt out and they're feeling like this market's really rough. But join the Discord, join the community. We'll help you reset your mental and we'll get you back on the right track. I'll talk to you on Wednesday.